Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, National Underwriter for Old Capital, Paul Peebles. And joining me, as always, Michael Becker.
Hey, Paul.
Michael also is with Old Capital. Today in the podcast, we have a great guest, and it's somebody that I've known for a long period of time, and he owns a property management company here in the Dallas-Fort Worth area. And it's a property management company. Many people may be familiar with it. It is called Wehner Multifamily. So in the podcast today, we have Ryan Wehner. So I thought we'd introduce everyone to Ryan and get everybody to understand a little bit about what Ryan does and a little bit how Ryan operates his business. I'm going to turn it over to Mike.
How long you been in multifamily management now, Ryan?
More or less about 10 years. I came here from Southern California in 2005, and I started managing my own assets. And about the end of 2006, I started doing the third-party route is when I started, so a little less than 10 years.
That's good. So how many units are you guys up to?
Right now, we're just over 7,700 units. So, in fact, after this call, I'll know if another one's closing tomorrow. And so we're always growing. We've been doubling about every year and a half, and we've done that consistently for the last 6 years. And so I attribute that to staffing my company properly. I actually don't have an active sales pitch, and I don't do outside sales. All of my business is generated through referrals, or I should say all, but 99% of it is generated through referrals. And so when people come to my office, it's already, pretty warm that they need to have management.
So you strictly do multifamily? Are you more in the B and C space? Kind of where's
That's
your,
exactly where we're at. So we're in B and C. Primarily, we're probably 60% C, 30% B, and we have a few flagship A products, but that's not really our sweet spot yet.
So what is a Class C apartment complex in Ryan's world?
It's usually 70s product or older, although there are some things that are, that we have a property that's in a 60s vintage that I would consider a B, almost A. So it really depends on the class of the asset, both in terms of deferred maintenance, tenant profile, average income sort of thing. So it's not all just on the year of the building.
Yeah. So when someone's looking to hire your company, what are the general services that you guys provide for your clients?
So we provide due diligence services. We provide regular property management, which is accounting. We do all of the books, pay all the bills at our central office, nothing on site. We do all the hiring. We provide all the payroll and, all the supervision. And then we have a construction management wing. So this year we'll do north of $12 million in construction management as well.
So due diligence, tell me a little bit about due diligence. Somebody comes to you and says, hey, Ryan, I'm thinking about buying, property A. It's a 100-unit apartment. And I want you to take a look at it and tell me what's your opinion of what the deferred maintenance could be on the property. Tell me a little bit about the rental survey. Mm-hmm. Tell me a little bit of what is your due diligence?
Okay.
What do you do?
So primarily it's broken down in a few different wings. So there's the physical asset of the property, and we can go into that in great detail. Okay. And then there's the location of the asset, which, the rent comp or the rent survey will kind of let us know what the average person's paying rent in the area. Okay. And we kind of marry those two together to get the valuation of the property.
So one of the things that I like about Ryan's operation, and when Ryan comes in and does due diligence on the property, he has kind of a proprietary software program that's on his iPad. Mm-hmm. And he goes into the unit, looks around the unit, and sees that there's a stove that may be built, in 1995, and he writes down the condition of the asset. So he rates the.
Do you want me to expand upon that?
Yeah, will you? Because I think this is.
So let's look at it. So let's
valuable.
Use an easy example: 100-unit apartment complex. It's easy to divide that number up. So on the average unit, so we'll have one of my maintenance supervisors go in and look at each floor plan for a particular building. If it's 100 units, usually it'll have two to four different floor plans. And we'll build a template per each floor plan. It used to be Excel. Now we have an application that's went live 3 weeks ago. But it basically provides the same results, just easier on our company to do it. And they'll go in, and on average, it'll be about 200 line items. A one bedroom might be 185 line items. Two bedrooms is going to be a little over 200. Three bedroom will be about 230. But it depends on the subject property. And we provide a scoring scenario where there's 5 different scoring options. And if it's scored as a 1, it means full replacement, or it doesn't exist. So if a refrigerator's missing, it'll be scored as a 1, or if it's junk, it'll be scored as a 1. 2 is a major repair or a minor replacement of a part. 3 is a minor repair. 4 is fully functional but used, kind of the definition of a C property. 5 is brand new. And so we'll build the template, and then we'll build a cost legend that's customized to that property. And so if it's a front door and the threshold needs to be replaced with the door, we'll have the exact cost with taxes. If it's scored as a 2, it just means the door. We'll have that exact cost with taxes. We round it up. We don't have pennies in the analysis. Sure. And then 3, there's a little bit of art to it. I mean, it's how long is it going to take to fix it? So if it's a minor repair, there's a little bit of art there, but we base it on our experience. And then 4 is obviously almost always free, and 5 is almost always free. Now, what works well with our system is it's not just something that spots deferred maintenance issues. That's the most important thing on a due diligence. But if we go in there and we see the market survey and we see it's been an owner that's been there for 50 years and the rents are $200 under rented, but all of the furnishings in there are for 50 years ago as well, and our new buyer says, hey, what can we do to improve this and make it rent faster and bring it up to the $200 rent increase? We can go in there and manipulate the cost legend no matter what they score it. If we want new flooring, a score 1, 2, 3, 4, or 5 will be a full cost. And so we can really manipulate from a central location without having the person who's walking it get confused and have too many details they're trying to track. Yeah. And so it helps us get the cost breakdown of the parts and any of the trades that need to be in there. It helps us get that within an accuracy level of, within 5 to 10%. And in the C business, that's very good. I mean, I don't know anybody that has it. So it's very statistical analysis. If you put it this way, you look at a 100-unit deal, we start walking it. It'll take 2 guys probably 2 days to walk it. And while they're doing that, we can be costing out, and we'll consult with the buyer. Hey, what do you think we should add here? Here's what we suggest to be able to compete with the other people in the marketplace. We can evaluate literally on a 100-unit deal, 20,000 line items within about 4 days based on our system, which is slicing it into things, creating lists, aggregating the data. We'll have it broken down by room, by item that needs to be bought, by room/item. We'll have it broken down by what units are going to cost more money. The other thing that's been very helpful is I actually put a summary of so say if you look at a GFCI where it's supposed to be in the kitchen, and it'll show that they've looked at 100 of them. There's been 100 kitchens. And we'll have a summary of the scores. It'll say, 95 of them got a score of 1, which usually means that it doesn't have a GFCI. In that scenario, we can buy 30, 40, 50 GFCIs at once. We'll get like a 30, 40% price discount. So a lot of times you get a huge price discount because we've statistically analyzed what needs to be fixed or repaired or upgraded. The second part of it is we don't have our maintenance people going on field trips every other day going and picking up 2 GFCIs, which, believe it or not, is probably a bigger cost drag than actually paying too much at Home Depot for a part. It's the guy that, hey, I got to go to Home Depot. Human nature is he goes there, he's not hustling. He's working with his hands all day. Everybody wants a 45-minute to an hour breather. So we really cut down on that. Helps us order things, get better pricing, and then it really takes all the skeletons out of the closet on the interior of a property.
Yeah, so the physical due diligence is one part of it. What is the other part of the due diligence you guys provide?
So we'll do a complete market survey, and then we do a full lease audit. We do a lease audit. There's literally 25 items per lease. We don't ask them to be delivered to us, so we'll send a couple people. Let's use a 100-unit example.
Scan it out.
Say there's 95. We don't even scan them all. They go in there, and they do a data entry on all of it. And then it's all in a sortable format. And what we really like to evaluate, as you know, a lot of things are being sold as, and I'm using quotes, 95% occupied. We sort by when the person moved in. So if we show, and we'll have graphs and a memo, and we send this to the client as well with the due diligence package of exactly when people have moved in. If it's very loaded on the back end that, 60% of the tenants have moved in the last 3 months, we'll have a sub-sorting of how their criminal credit, everything else was checked. So we can evaluate the value of the leases. I don't know if I use the same word twice, but we really want to evaluate the people that are in there. On the flip side of that, we've went into buildings that are owned by the same family for literally 40 plus years, and their files are horrible, but everybody's lived there for 3 or 4 years. And on the flip side of it, we'll see that as not a very risky situation either, because the longer a tenant's been somewhere and paid, that's a perfect sample of whether you're going to have high turnover. All this stuff that we call the lease audit and the score summary, those are what we consider like the science of our due diligence.
Right.
We marry it together, we evaluate it, and it kind of culminates, crescendos at our operating forecasts. And our operating forecast takes heavily into account what we think the turnover ratio is, what the timing of repositioning the asset is, and what the average unit turn is going to cost, not based on ratios and percentages, but based on 20,000 line items and evaluating them, on a singular level altogether.
Listening to all this stuff, my jaw opened, because you guys not just manage a property, but you guys really do some scientific process on the front side of the transaction, making sure that you have your arms and your hands around what this person's buying, what the potential is if you manage the property, what that's going to look like. So, huge amount of not only just data, but just pre-work before you guys even get engaged to start working on the deal. And that to me is a huge value add. And if you don't have a team like Ryan's on the front side of the transaction doing the analysis just like Ryan has done, then
you're rolling the dice.
You are rolling dice. That's absolutely correct.
Literally over 50% of the time, our due diligence is probably overkill.
Yep.
But the 50% of the time that it's not, it's saved dozens of clients, hundreds of thousands, if not millions of dollars. The added benefit to it is, first of all, they end up financing easier with that data.
Yep.
Lenders tend to like to have the data and backup, and we show everything. Secondly, it really gets the equilibrium of sales price to, you'll see, especially in this market, people will lock up an asset, and then there's a lot of people that just retrade and pull the numbers out of thin air. And so our clients aren't being confused with those type of people. It's like they show this, they go, hey, we need to retrade. Here's a deferred element of your building. And it's not pulled out of thin air. It's not some subcontractor who wants to replace a roof. It's like, hey, look, we have 20,000 data points. Here, the refrigerator of this 100-unit building, 35 of them are on their last leg. And here's the units that they're on their last leg. How can you argue with that? At least it gives you a little bit better negotiating tool and get... So it's
sometimes sellers just don't even know what kind of condition their asset is.
Right.
And you
some of them don't live in the state.
And you guys walk all the units, where a lot of companies just will do a sampling of the units. You guys walk all the units, and that report is phenomenal. Mike?
Yeah, so we've talked quite a bit about, like, on the front end, we only own the asset now. So now that you own the asset, what are some of the things that you guys do? What separates a successful management company from one that's not?
Here's the difference. The processes, I think, are a function of our culture. I like to solve problems. I get bored if I'm not solving problems. And so as the business has gotten larger, I'm less with the day-to-days. So now I guess all of my human capital goes to building even better processes. But the processes are not what make us. 90% of our value is based on our mission statement, which is treat the client's asset and money like it's your own. And I take that very seriously. We've had managers that perform very well on properties, but if we find even a few examples of them not treating the client's money and asset like it's their own, we cut them loose. I didn't spend 10 years building a reputation to keep somebody that's going to be like a cancer in my organization because they earn a little bit more for a few months. Sooner or later, it bites us in the behind anyways. Yeah. We have those type of people. So really, maintenance of the culture. If you've ever worked for my company, it's an immediate dismissal if you take a lunch from a vendor. If you notice, anytime you're not a vendor, but I always pay for everything. I never let anybody buy me anything. That's the culture of the business. I don't say one thing and do another. I don't take the free tickets from the insurance broker. I don't do those things. And I think that culture is really the difference, because bottom line is, back when I had 2,500 units, 3,000 units, we had the same ratio of satisfied clients, and I didn't have all these processes. The processes have made us better. It made us run it better and be able to scale it up. But at the end of the day, it's if you have somebody that you can trust, that's going to treat your money like it's their own. And really, I make mistakes with my own money. So this isn't like some pitch that I don't make mistakes, and then we don't make mistakes sometimes, but we tend to make fewer and we fix them faster because we treat it like it's our own. It's kind of the golden rule of business in my mind.
You talk about scalability in a business. I mean, you're at a point that almost 8,000 doors, I mean, you've got to be one of the largest property management companies.
It's all DFW too.
What's that?
I'm not scattered about the state. I'm all in DFW.
Yeah,
currently.
Not only just in DFW, but in the state of Texas. I mean, you are a machine, but as a machine, you actually go to China or the Philippines or
China,
and all these places to get products,
source materials,
to get products directly and get them shipped to Texas. Tell us a little bit about that business, because I think that's fascinating.
So we really only buy one product. I didn't want to become a full distributor, so I like my day job. Mm-hmm. But I found one product that we were using over and over and over again. I'm a firm believer in it. I own a couple hundred units myself. I have some of that same product from 8 years ago still and it's not even to the same specs as today. That I saw that we were buying thousands and thousands of feet of this a month. So I went to China, went to the Canton Fair, and sourced direct suppliers, and I had designed to the specifications that I wanted, which is 6 mil wear layer versus what you buy off the shelf here.
You're talking about flooring, vinyl
plank flooring. Yep. We have it with a higher resolution. I got it with higher resolution with a polyurethane finish, and I buy it direct, and I carry on that savings to our clients. So we really tried to pinch pennies where it makes sense. And I like to say we're frugal. I don't like to say we're cheap. People have been telling me I'm cheap my entire life, but I say I'm frugal. I'll spend money where I think I'll make money back, right?
How much flooring will you bring in from China?
About this year, we wanted it to be every month. So it's every month I have a new container that's 51,000 feet of flooring. So we use it for the construction management and just the regular property management. When they had a strike in Long Beach, that caused a 2.5 month gap, and that really hurt us. That was very difficult, and we had to go different resources to get those flooring.
How much
materials.
Of a savings is it by going?
It's probably, if somebody was going to buy 6 mil, it's probably a 20 cent a foot savings to the client. So
that's probably 18%, 15%.
20 cents is it's about 23, 24% savings to the client.
Yeah.
So a little over 20, because they pay less than $1 a foot.
You're doing about 600 square foot a unit on average, probably, right?
More or less.
Yeah.
Yep. And we're doing a lot of renovations, and about 15 to 20% of the renovation work we do is not even for our own clients. So a lot of it's going to those areas as well.
So having a property management company, you guys not only do upfront the due diligence into the transaction, but you guys will also do rehab the property too.
Mm-hmm.
And also too is that you'll manage the asset. Talk a little bit about reports.
Okay.
Monthly reports that you provide.
So we use software called Resman. It's a cloud-based property management software. Incidentally, it's here in Plano, where you guys are located, just by chance. It's pretty similar to a lot of other products. It doesn't have all the bells and whistles that some of these way more expensive products have, but it has enough for what we do and what all of our clients really need. And we'll do cash or accrual accounting. all of the profit and loss, cash flow statements, balance sheets, full reconciliation. We'll even reconcile your settlement statement and include that on the in your balance sheet. What we don't do is we don't do your taxes. Everybody is recommended, and actually it's part of their contract that they have to have a CPA tax accountant, separate out the things, what can depreciate faster and stuff like that. We don't do that in-house, but it's pretty easy with our system. It's so organized. Clients have told us that their bills are about 40% less on average with their CPAs because it's organized and it's easy to kind of sort the information. Our P&L, every single item that's bought has a memo with what was bought. So if there's one receipt with 10 items on it, and 3 of those items are plumbing and 4 are electric, it's not one repairs and maintenance line item. It's actually 3 transactions with the items that they bought on electrical breakdown, 4 line items with what it is on the memo. So we have a lot of data that if people want to, and I've created the system, made it wash, rinse, repeat, so that we could do it quickly and profitably. I mean, I have to run my business profitably. And we've created a system where it makes it very easy for us to enter that data.
And usually get those reports out in about...
We get them off as a matter of procedure. They're by the 10th of the following month. So I know we're a little bit quicker than other people. So the first week of the month is always brutal. But you can get them as often as you want. Mm-hmm. But as a matter of procedure, they're sent in PDFs to the client by the 10th of the month. I think we've had once in the last 4 years where it hit the 11th or the 12th.
So tell us a little bit about somebody that wants to hire you. What are you looking for in a client? What's your best type of client? And let's kind of set the expectations of what you're looking for.
Yeah, it's a kind of a loaded question. So as you know, Paul, but I need to tell the world, like I told you, I don't do outside sales and I'm not selling the service. I'm always spending all my time trying to get more talent on our team. I feel like if I have the talent and somewhat the processes, but mainly if I have the talent, the people will come.
Yeah, I mean, we'll stop it right there. I mean, you are definitely blessed that you don't have to go out there and pound the pavement. People come to you. People love your business is a referral business, mm-hmm. and you're not out whining and dining folks to bring business to you. And you're in the business because people want to do business with you. So that's a great position to be at. So and then you focus in on your business every day. So you're not just
so it relates to the clients too, and that's so if it's essential and critical, and that the client is respectful to myself and to my employees, and I demand respect, so I always get it. But a lot of times, I mean, it's very, very important to me that they treat my employees with the same respect that they treat me. So that's basically a deal killer. If that can't happen, then I can't do business with somebody. And I don't care if it's 5,000 units, right? That's just the way I live my life, right? So that's the most important thing. As far as do they need to be experienced or inexperienced, or, we'll kind of take all fashions of clients. It's great to have experienced clients. It's easier to scale with them because they understand the business. They understand the bumps in the road on C deals. But I actually enjoy educating new clients that are kind of new to the business. Hey, here's how we're going to make you profitable. This is how it works. Feel free to give your input. This isn't rocket science. You don't need 30 years of experience to have a good idea to make more money. I love that. I kind of feed upon that, and I encourage it. So I never would say to somebody, hey, if you don't have experience, I don't really have time for you. So it's the exact opposite.
So kind of transition over a little bit. You talk about making more money and good ideas. What are some of the top couple things you guys have been doing over the last several years to create value in an asset? I mean, obviously the market's been going crazy and rents are up and occupancy's up. But what are some of the more effective things you guys have been doing?
Look, there's nothing as far as what you've done on your buildings, what we've done. I don't have a better way to change a toilet or fill a lease out. Yeah. So the main thing is having the proper supervision and unannounced visits on the property and doing market surveys on a very regular basis in this market to squeeze every penny out of the rent, right? So on the revenue side, that's more or less the idea. On the expense side, there's buying the flooring at cost. using all of our internal people and having it a pass through to the client with the construction. We're able to renovate to the same quality of where they'd pay a GC 10 grand. We can do it for $6,500. So we've saved literally probably $2 or $3 million to several clients over the last 3 years on the construction side of it, which kind of pulls right into the property management. In terms of the revenue, it's just keeping your finger on the pulse very closely. I have enough staff to do that. So, I mean, those are the main things. We also have a water log that you're familiar with.
Tell us about that, because I think that's
That's a very important thing. It's great that somebody fixes the water and then walks away, but as you know, it's all cast iron from 50s to 60s. There's a lot of leaks all the time. So we have a system whereby they type in the date and they type in the meter reading, and it'll automatically tabulate what the average usage they've had and how that matches up to what the expected usage should be. If it's over 50%, it turns red. If it's over 20%, it turns orange. If it's over 10, it turns yellow. If it's good, it's green.
Let's go a little bit more technical, because you guys go out there and measure the water and the water meters every day.
Every day. It's called 5 days a week, so we don't do it Saturday and Sunday.
Yeah, 5 days a week. You guys are looking at the water meter and making a determination whether you're leaking any water or abnormally large water amounts.
Right.
Because you can figure out that today versus
waiting till the bill comes.
Yeah, a month and a half from now, where that could be a major leak.
Major leak in terms of dollars up front that. Mm-hmm. Secondly, it could be an underground slab leak that's doing damage to your structural integrity of your building. So there's twofold very large issues. And as the young lady was saying earlier, a lot of the water usage in most of the cities has a tiered. So once you get past a certain tier, the water becomes more expensive. Yeah. So water is very important to be monitored. We are the only ones that I know of that do that right now, and we're going into generation number 2. So by the end of this month, maybe the middle of next month, there's actually going to be a Wehner waterlog website, and every one of the maintenance will pull down from the drop down their property, their password, and they'll put the meter reading in themselves. And then it'll automatically have different scenarios. It'll send emails to the supervisor, the manager, when there's an issue. When there's not, nothing will happen. If they don't fill it out for 3 or 4 days, we can have a scenario where it sends an email saying, why haven't you done your water logs? And so we're created another process to save on water. So stuff like that we save. We're all about saving the money and really just squeezing as much revenue out as we can.
How much time does that take for like a maintenance guy? You got a 100-unit building. What would that take?
So if it has one meter, he pulls up the thing and looks at the meter, and it says, and we kind of want them to do it about the same time every day.
Yeah.
What's great about the app is it'll take into account by minute, not just by day, or by 15-minute interval, not by day. So right now we have them, they have to go in within about the same hour every day. So they get that, they write it down, they go to the manager, she types it in.
Got it. So I guess most of the properties are a little bit older, master metered, so it would be pretty efficient process,
if you have
right?
4 meters.
Take 5 minutes.
Yeah, 5 minutes.
Yeah.
Some of our 300-unit deals have 5 meters, but it's worth the expense. We do have a building, a 252-unit that has 54 meters, and we only do it there once a week.
Got it. That definitely is.
That's still better than waiting 6 weeks, because if you think about it, and I don't want to get too much in this, but just give me a minute.
Yeah, sure.
The meter reader, let's say you're in Dallas, comes out on October 15th. He makes a meter reading. Let's say you had an underslab leak, or you had somebody with a running toilet or a faucet that's just running, right? On the 16th, pops up. And say that tenant doesn't tell you or whatever. That meter reader comes in November 15th to read the meter again. Then he goes to Dallas to his friends, and they generate the invoice. That may not come out till December 1st. They send it. We might not get it till December 7th. We may not open it for 4 or 5 days. You can almost have 2 months of a leak that's creating structural damage, could be creating drywall damage. It's money literally and metaphorically going down the drain.
Yeah.
I'm fine with if we accidentally bought a ceiling fan that was a little too expensive and overbought on one unit. People make mistakes. I don't like spending money that's going right down the drain.
Yeah. Yeah, no, water is certainly a big component of these older buildings for sure.
Yes.
No question.
Mm-hmm.
So, well, perfect. Is there any other, one of the things we always try to ask property managers or, some interesting stories? I'm sure you've seen a thing or two.
He doesn't
in your
really
day.
want to hear mine.
I
This question's good for anybody but me.
I'm sure you've seen
I want to hear a good
a
one.
thing or two. So you got a
Goodness, I don't
crazy
know.
story or
I
two.
have so many, but I don't. You're
You know.
getting propositioned for drugs or
You've been
stuff
on
like
a property.
that constantly. What was funny is, I don't always dress my part. I've gotten better at it. Part of it is your advice, Paul.
What's that?
Just dressing up a little better and wearing button shirts and stuff. So here's kind of a funny story. So I show up to one of the properties, and I guess one of the people that was late on their rent wanted to go and yap at the president, It's like, so I get there and I have like sweats on and a t-shirt that's stained and my hair wasn't combed or whatever. So I leave and he comes out over to the manager because she told me about this. That couldn't have been the owner of the company. Did you see how he was dressed? And I told my dad, because he always makes fun of me the way I dress. I go, see, there's a strategy behind this.
Well, when you own or manage 7,800 doors plus and you manage 70 plus buildings, you must be doing something right. So whether it's the due diligence up front or the rehab to help people, recreate these properties, or just manage them on a day-to-day basis, putting the right people in, and then providing, the ownership groups, the investors that have put money into these properties, just kind of a background about what's going on with their money. So a lot of people have put a lot of faith into Ryan Wehner and Wehner Multifamily, and so I think they're a great group to talk with, to try to help you out, making sure that if it's something that you need to talk to, Ryan is a very approachable person, and he definitely knows the business, and I want to thoroughly recommend Ryan and his group. Anything else, Mike?
No, I said is there, if someone wants to reach out to you and maybe talk to you about potentially managing a building for them, what's the best way for them
I think
to
the
get a hold of
best
you?
way would be to email me. And so my email is ryan@wehnermultifamily.com. So that's RYAN at WEHNER multifamily.com.
Ryan, I can't thank you enough for coming in and spending some time with us today. We certainly appreciate it. And Mike, thanks for spending some
I
time.
really
Thanks.
appreciate it, guys. Thanks.
See you, buddy.
Thanks.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.